Welcome back. It's all eyes on Ola. The company's net loss has widened to 347 crores in Q1, but that's if you're comparing it year on year. Those losses at the PAT level as well as the EBITDA level, they've actually narrowed sequentially quarter on quarter. Revenue in terms of the year on year growth is looking pretty good at about 32%. Our colleague Ritu Singh caught up with Bhavish Aggarwal, Chairman and Managing Director of Ola, to talk about the road ahead and the new launches.
The key highlight of this earnings was that our automotive segment, and this is the first time we were publishing earnings, and we actually split our earnings into two segments, the auto segment and the cell segment, given the nature of the businesses and the stage of the businesses. So the key highlight is that the automotive segment is actually almost EBITDA break-even. You know, we have come from last quarter of almost negative 8% EBITDA to negative 2% EBITDA, about a 30-odd crore EBITDA. And there was a one-time reversal of PLI. If that was not there, you can assume it was an EBITDA neutral quarter for us on the automotive segment. So actually, that's a very important highlight that I want to share with all your viewers, that there were a lot of people in the industry who used to believe, can EVs make profits? Right? And we have shown that actually we're already there. Despite a reducing FAME subsidy curve, despite what you mentioned, our tactical discounts here and there, which we keep doing and we'll always do. But EVs are a very solid business model. EVs are the future, not just from the consumer lens, but also from the balance sheet, as our financials this quarter tell.
You know, when we talk about operational cash flows, you're still in the negative.
Yes.
The loss has widened sequentially. It has widened over the last year. So what can you guide the street about, you know, achieving this break-even? When will you get to that stage?
See, the reason, that's a very fair question, Ritu, and that's why we have shown two different segments. Because on one side, automotive for us is growing well. And we are seeing increasingly good operating leverage because we've already invested into the factories. We're sitting in the factory. So we've already invested, and as we are increasing volumes, the fixed costs are not going up with it. So, and that's why our EBITDA is almost break-even in this quarter in the automotive segment. For automotive, you saw us announce today the new motorbikes.
We'll get to that.
We'll get to that. But from a financial perspective, the motorbikes are built on the same platform, same factory, all fungible capital expense. So it's not going to increase the cost structure in any meaningful way, but volumes will go up further. Scooters are continuing to grow, and motorbikes will add on top of the scooters. So this increasing volume over the course of this year with new products, as well as with penetration growth, is going to get more and more operating leverage for the automotive segment. So that's the key highlight on the automotive segment, growth and profitability. On cell, so if you look at the console loss that you were mentioning, the cell segment is in investment phase. We are the largest recipient of the government PLI for lithium cell manufacturing. And the first phase, which is 1.5 gigawatt hour, is already commissioned. Next year we'll complete 5 and then go to 20 in steps. So there will be a period of improving profitability over there, but right now we're in investment phase.
So should we assume that, you know, given that it's only in the first quarter of FY26 that you start integrating these cells into your own scooters and then maybe motorbikes, that at least until then, given that that is the core strategy for your cost reduction, that profitability, you know, may not happen until then?
See, on a directional basis, we are focused on delivering growth with profitability. So we want to improve profitability while continuing to focus on penetration and growth. And Ritu, the way we are doing that is actually by building the manufacturing ecosystem around this industry. And again, today you saw us announce the cell. Q1 FY26 is when the cell will come into our product. We already have a lot of vertically integrated manufacturing. We announced our Gen 3 platform, and you saw how the cost of making not just the cell, but the other things around the scooter or the two-wheeler, the electronics into one board, the battery as a structure itself, all these things reduce the cost. And hence, all these things will continue over the course of this year. So we expect improvements in gross margin incrementally over the next few quarters till the cell comes in. That's when a major shift will happen on our gross margins and our EBITDA.
You did show a EBITDA margin improvement of 600, 680 basis points or so. But I'm just wondering if this is going to significantly improve from here on, because you announced a whole bunch of things that you're going to be investing in across your businesses. Do you have costs peaked, even though you say, you know, the technology is sort of fungible? You've already made the heavy investments, but have costs peaked, and will margins significantly improve from here?
No, we have a lot of juice looking ahead in gross margins. A lot of the Gen 3 technologies that we showed you will come through over the course of the next few quarters, culminating in the cell as the next big cost reduction on the gross margin. So we will continue to see incremental improvements on both gross margin and EBITDA.
Okay.
Gross margin is driven by cost reduction on the vehicle materials and technology advancements. EBITDA is driven by operating leverage. And both these themes remain true for the next few quarters.
Well, let's talk about the bike that you've just launched.
Yeah.
Everybody seems most excited about that. Starting at $79.99 all the way up to 2.5 lakhs, as your introductory prices. Just give us a brief sense of when deliveries are starting in the first year of manufacturing. What kind of units are you looking to produce?
Yeah.
What are the aspirations there?
Ritu, India runs on bikes. 2/3 of the Indian two-wheeler market is bikes.
Yeah.
I grew up wanting a bike.
Yeah.
Right? That's in the Indian rides a bike. Making bikes electric is a very important part of the electrification of India. The next frontier of electrification is bikes. And what we've announced today are 3 bikes, not just one, across a price band, like you mentioned, from 2.5 lakh rupees to 75,000 rupees.
Yeah.
So the Roadster Pro, the Roadster and the Roadster X.
Yeah.
Now, the important point to note for your viewers is that all these bikes will actually start from where the scooter supply chain and cost structures are already.
Yeah.
Right, because the entire platform is common, and the suppliers are common, the supply chain is common. So we'll have a good gross margin from the starting point, and then we already have capacity in our factory. We have an installed capacity of about 1 million units a year.
Okay.
Our scooter volumes are roughly 500K a year right now, growing.
Okay.
And we have headroom to grow, and the factory capacity is all fungible across scooters or bikes, because the platform is the same. So we are going to grow in the existing capacity, and then when we cross 1 million combined capacity, we'll install more in the factory.
Because you'd announced these last year and now you're officially launching them.
Yeah.
You must have a sense of the demand. I'm just trying to understand, given that you say it's 2/3 of the overall two-wheeler business, will it be the same when it comes to revenue for you?
See, again, we will have to see how the revenue and the scale happens, but I feel very confident that there is going to be a stronger rate of growth in motorbikes because of a few things. Firstly, the market is already educated on EVs now.
Yeah.
3 years ago, nobody knew EVs.
Yeah.
We had to educate the scooter customer about what an EV is. We had to set up the charging network. We had to set up the retail distribution network. We had to set up a brand. We had to do a service network, all of these things. All of that is already there for the motorbike. Consumers are aware. Cost structures are there. And motorbike, especially in the sub 1 lakh rupee segment, is all about cost of ownership, which is the basic value prop of EVs over ICE. And that's why I actually feel very confident that motorbike adoption will be very fast. If you see today, scooters are about 20% electric penetration. Motorbikes are less than 1%, exactly where scooters were 3 years ago. So maybe motorbikes will get there at 20%, not in 3 years, maybe 2 years, maybe 2.5 years. Who knows?